What a wild week we've had in the market here over these last couple of weeks. And if you've been invested during this time, congratulations, because you have been part of history. This drop that we experienced was the fastest 30% drop we have ever seen in the stock market. This is historic and will be remembered for a long, long time. So if you were an investor during these tough times, you know people are going to be talking about this for a very long time into the future. And you could actually be someone that chimes in there and says, you know what, I was invested during that time. Let me tell you how it felt. And we didn't stop at just 30% down here. We actually extended down to near 36% from our highs on the S&P 500 last week. And panic and fear was literally all around us. In fact, here's a screenshot of the Fear and Greed Index that measures what the market sentiment is like. And at one point, this was actually at a 1, which is the lowest level this can go. And clearly this was seen in the market sell-off at how violently we kept dropping day after day. But fast forward to this week, and so far things are looking to stabilize a bit. We're now up nearly 18% from the lows. Many smaller cap stocks are even up near 100% from their lows. And things are starting to look good to the upside once again. Now naturally the question comes up after we've seen somewhat of a recovery here is this the bottom? Have we bottomed here in the stock market? Well, looking at the S&P 500 here, the SPX specifically, we see a low just under 2200, but since then the market has jumped back up and at the time of this recording sits near 2600. The result of this is many investors feeling FOMO, fear of missing out, for not buying in last week when prices were much lower. And now many are resorting to chasing stocks as they start moving higher. So really, is this the bottom and should we start buying stocks right now? In my VIP group, we have a Discord channel, and in there I made a comment on the 23rd that this may be the bottom because I did feel that peak fear, at least for now, had passed. And my members know, and I'll be honest with you guys as well, I have absolutely no idea if what we saw last week was the actual bottom here in the stock market crash. In fact, absolutely no one out there knows if that was the bottom. Not Warren Buffett, not Ray Dalio, no one. And with my strategy, I don't even care about the bottom. I don't even try to time the bottom. What I do is I dollar cost average. I keep buying stocks as they continue moving lower. And if I still see value in them, if they go lower than when I buy in, that's just a better opportunity for me to lower my cost basis, and I just keep adding more to those stocks. I find this strategy extremely effective for me because it lets me buy into stocks logically when everyone else is panicking and selling off their stocks. And as a result, I get some incredible deals on some incredible companies. And funny enough, just after I've averaged in the last few weeks into these companies, a lot of them have moved up quite significantly from their lows last week. And as a result, I've actually cooled down on my buying and I'm starting to build up my cash position once again. And it's pretty funny to see this because as I personally am scaling back here, building up cash once again, I see a lot of other investors go in and start to FOMO and buy into these stocks as it continues rising day after day. This is one of the most textbook examples of FOMO. When investors see prices moving higher, they feel that that's the best time to get into a stock and they try to pile into that. We've seen that with many individual stocks. The most recent example I can think of is probably Virgin Galactic or even Tesla. And we all know what happened with both of those charts when the stock price moved pretty much exponentially higher, so I'm just going to leave it at that. Now, I personally fundamentally disagree with this sort of logic and thinking. It doesn't make sense to me to buy stocks when they're rising in value versus when they're dropping in value. If a business that I want to own drops to a price that I think is incredibly undervalued, why would I wait for it to start moving higher to start buying in? That just doesn't make any sense to me. A good example here to think of this is, say you wanted to go buy a new Xbox console and its regular price is $500, but it goes on sale for $300. Would you say, I'm just going to wait to see if this goes lower? And then a week later, the sale ends, the new sale starts, and this time it's actually $400, so it's gone up by $100. and you're like, okay, well, you know what, I missed out on $300 sales, so I'm just gonna buy it here at $400. See, this logically does not make much sense, because when you see something that's a good value and essentially on sale, there's no reason not to pick up that stock, maybe in chunks, maybe not all of your position at once, but just average in, which is what I'm doing right now with dollar cost averaging. It doesn't really matter to me if the price moves even lower after I buy in, because that's just even better value, and because I dollar cost average, I can add more shares and lower my cost basis that way. And this is really how I see stocks. McDonald's, for example, is a business I expect to be around for a very long time. I saw prices in the 130s and I was a buyer. I was averaging in, so I bought some maybe at 135, and then when it dropped to 120s, I bought some more at 125. And I just kept building my position this way. I wasn't really waiting for the bottom, because more often than not, you would miss out on the bottom. And when you do see the bottom and start buying after the fact, you've usually missed out on some big gains. FYI, if you look here, McDonald's now sits at $165 per share in just a couple of days, because many investors realize that the prices that we saw in the 130s and 120s were just too undervalued for this business. So anyways, hindsight's 2020. Say you sat out of the market and today you're actually looking at the market and you're wondering, is it time to start buying now? Have we bottomed here? And is this a good time to deploy my cash? Well, like I said, I don't know what the future holds, but my honest opinion is that we may actually see another drawdown here, another drop in the kind of short medium term. And this is just my thinking. This is just what I foresee could happen here, because I don't know if we're completely out of the woods yet with everything that's going on. And I just think that we do have some more downside potentially before we move much, much higher. But that may never happen either. I don't know. I can't time it. But anyways, let me show you here based on the charts why I think we may actually be heading lower in the near future. So if we look at the S&P 500 here, the SPX graph, you'll notice that there's one thing I have listed on here, which is a gap. Now, I've discussed gaps on the channel many times, and if you look at historically of charts, you'll notice more often than not that they like to come back and fill gaps that they've created. I believe this is true because a vast amount of technical traders are out there, and also because a lot of computer algorithms use these levels for buying and selling. Anyways, we can see that the S&P 500 gapped up on Monday, going from 2300 to 2330, and since then it hasn't actually pulled back. If I was a betting man, I would say it's likely that we come back to this level at some point and fill this gap. At least that's what history tells us with price movement. Now, will this happen? Who knows? It may not. But one thing we haven't seen is the big tech names really correct bigly, names like Apple and Microsoft. So if they finally crumble and start correcting much more than they already have, which is possible because Apple, for example, will be affected this year due to lower iPhone sales, because people are, of course, at home and they can't really go into the stores and check out iPhones and all this stuff when they're locked down. But anyways, I think that we could see the S&P 500 go down to 2200, maybe even lower, before we find the true bottom if these tech stocks do start dropping. So anyways, the answer to the question of is this the bottom is maybe, maybe not. We won't really know the true answer to that until a few weeks later when we actually see if this was the bottom. What I do hope is that you realize that the recent movement in the market shows us why it's so hard and nearly impossible to time the bottom. I cannot even begin to tell you how many comments I've seen on the channel of investors commenting saying, I'm just going to wait for the bottom and then I'm going to start buying in. So now I asked those investors that did comment that, is this the bottom and are you buying in? Let me know in the comments section down below. The dilemma, of course, that I know that most of you are feeling at this point is you're not sure if that was really the bottom. You're suspecting it could go lower. So the end result, more likely than not, is that you're just going to be waiting on the sidelines for another few days, maybe another few weeks, to make sure that this is in fact the bottom. Keep in mind that the S&P 500 as of today has already recovered 18%, and by the time the bottom is clear, we may have recovered already 30% or more. So you may be potentially missing out on some massive gains here just because you're trying to time and wait for the bottom, which in hindsight will be clear, but as of right now is not that clear. And I really hope that this video kind of gives you a little bit of a different perspective as to why timing the bottom is not an effective strategy. Now, I'm curious to actually hear from you guys as to how many of you actually bought into stocks in the last week. Buffett's famous quote is, buy when others are fearful, and what we saw in the market last week was some extreme fear. So of course, naturally, I was out there and I was buying stocks. As it stands today, the fear index is at a 21, which is still a lot of fear, but nowhere near the level that we saw last week. Also, one big thing to remember, which many people, investors, non-investors, pretty much anyone who looks at the stock market forgets, is that the market is forward-looking. During the Great Depression, the bull market actually started during the darkest days, when everyone thought things could not get any better. And even during the Great Financial Crisis, the market bottomed when economic data was still extremely weak and unemployment numbers were still getting worse. In fact, here's some data to back this up. In March 2009, the market officially bottomed, but clearly you can see that unemployment rate kept getting worse for months to follow. The market is forward-looking, and the market predicts things before we see confirmed numbers, and this is what most people do not understand. So if this is the true bottom here in the market, it means that the stock market is actually predicting that the economy and everything around us will recover sooner than we thought. Now, like I said, we won't know if this is the true bottom here until a couple of weeks out when we can actually see more data and see if we've come back down or test these levels. But what I will do is actually make a follow-up video if you guys want to see that. Drop a like here if you do, and we'll revisit this video then to see if this was truly the bottom. Guys, thank you so much for watching. Don't forget to stay invested here during these tough times. I'm with you. I'm staying invested, so let me know what you're doing in the comment section down below. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.